Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for Three Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Welcome everyone to another of our weekly investment manager videos, and many thanks once again for tuning in. We are all aware of the growing cost of energy, be this natural gas for heating our homes to the price of oil for running our vehicles. However, with the global focus on decarbonisation, how is this affecting infrastructure investments? Today, I am absolutely delighted to speak once again to friend of the channel, Jim Wright. I'm going to be delving into this particular topical topic with him, who manages the Premier Miton Global Infrastructure Income Fund. But first, before we get into the content, if you are enjoying our channel and you have not subscribed already, it would be wonderful if you could do so. It really does genuinely help us with producing all of our financial planning and investment management content. So, begging out of the way, Jim, once again, thank you very much for giving us your time and coming in today. The world's talking about increased cost of energy. You put the news on and it's there straight away. How is this impacting the infrastructure sector, the new infrastructure investment association sector, and your fund in particular?
Morning, Andrew. It has a huge impact. It has a huge impact. It has a huge impact on how we think about capital allocation and how we think about what stocks that we need to own, and how we think about the energy transition, which is I think one of the dominant investment themes of our lifetime. I think the important thing for us is it is a transition.
Mm-hmm.
And a point that was made recently to me, which I think is absolutely spot on, is that if you give the people running the grid or the politicians, if they have the choice between blackouts and no power or burning coal, they will burn coal.
Yeah.
And so, given that, you have to make sure that the transition happens in an orderly way, because that, put simply, that is the last thing that any of us want to see.
Yeah.
And if that means more investment in gas as a transitional fuel, then it is obviously a hydrocarbon. It is a fuel that emits CO2, but it's way better than coal in every way.
Mm-hmm.
And so I think we have to have joined up thinking. We want a clear path to renewables,
Mm-hmm.
and to 100% renewables.
Mm-hmm.
But I think one of the things that regulators and politicians perhaps need to bear in mind is that it is a transition, and we need to avoid the worst possible outcomes, which are unforeseen but happen.
Yeah. What you said about the demand for carbonized fossil fuels is happening. We see it today. You're absolutely correct. How is this affecting clean energy demand, and certainly the stocks that you hold, and then also factoring in COP26 and the increased vision of a decarbonized world?
So it's good news in truth. It is good news, because obviously the more expensive hydrocarbons become, the more competitive renewable energy becomes. And what we've seen is both, gas, and clearly gas sets the price of electricity quite a lot of the time as the marginal dispatchable fuel. As that's risen, and in tandem as the price of renewables has fallen. Back in the day, the UK government was subsidising UK offshore wind at £150 per megawatt hour.
Mm-hmm.
Now we're looking at more like 50. That's just the transit, the path that the offshore wind has gone through, from being a kind of an early stage source of generation to a relatively mature source of generation. So renewables are getting cheaper, fossil fuels are getting more expensive. That's great. That provides an economic backup to the social need and the environmental need for reduced carbon. That can happen in parallel. So that's good news. And that's good news for our stocks. We own a lot of stocks which are the world leaders in renewable energy generation, stocks like Ørsted, stocks like SSE. And the potential for growth for those stocks is huge. The issue is that you have renewables which are intermittent. So you get the power when the wind blows and when the sun shines. You need to be able to store that power. And that's almost the next stage in the evolution of renewables, because if you get kind of proper storage solutions, which are developing now, then you move to potentially a grid where you need very, very little fossil fuel to fill in the gaps.
Right. Okay. So it's about the blackouts, as it were, the gaps, the drop in.
That's right. And at the moment, the gaps are filled with gas, and unfortunately are filled with coal. And that's what we need to avoid, because obviously coal is extremely destructive. And I suppose the other point to make is that if we're thinking about the electrification of vehicles, the growth of EVs, the installation of heat pumps, we could have another chat about that and the practicality of it. But if this is what policy is driving, lots more of electrification, that electricity has to be renewable. If that electricity is produced by fossil fuels, then so what? You may as well drive a diesel car. So, the renewables, the introduction, the growth of renewables on the grid is just absolutely vital. But it has to be done in a staged and measured way.
Looking into the end of this year, moving into next, and specifically focused upon your fund, the Premier Miton Global Infrastructure Income Fund, how are you positioned at this moment in time? And has there been much change during the year as we've gone through?
Yeah, we've actually used some of the relative weakness in some of the renewables and energy transition stocks to build those positions. So we've added to our position in SSE as an example. We're also, it's slightly off piece for this topic, but the growth of digitalization and the need for high speed data, that just remains a core theme, and we've been adding there as well. But I think almost where I'm most excited is what you'd consider what the man in the street and the man watching your channel might consider the dullest part of the energy transition. The grid, the pipes, the wires, the poles, the cables. This is not exciting as an asset class per se, but actually the investment that needs to go into the grid to support this electrification, both connecting up the renewables and getting the distribution systems in place so you can charge your EV at night on a smart meter with the lowest tariffs and the meters talking to the grid and so on. All of this requires grid investment. And the thing we love about, what I love about infrastructure is when we get assets that have these, what Buffett would call these sort of very deep moats. No one is going to build a new electricity distribution grid in London or New York or Frankfurt. They're going to use the existing grid. So we know that investment will come into the assets that we can own. So I think, adding to stocks like National Grid, like E.ON, a lot of the US regulated utilities, we own transmission and distribution grids. You can have as many Teslas as you like, but if the grid is insufficient, you can't use them. So that's our focus. That's where we'd like to invest.
And you can hear that on every single discussion piece with regards to electric vehicles. It's not about electric vehicles themselves. It's about the charging of. It's
Yeah,
about
yeah,
the availability of that physical network of charging
yeah.
points that will drive forward the success of.
Yeah, it's the range anxiety. You can fill up a diesel car,
Yeah,
and you know that you'll be able to drive 400 miles.
absolutely.
An electric vehicle in the middle of winter with the heating on and with a little bit of congestion,
That's it.
you're probably not going to drive 200 miles without a charge at the moment. So
No.
you need to know that that charging infrastructure is in place. And
Hmm.
again, that's
Yeah,
where my companies
yeah.
can can grow and can profitably grow.
Yeah, and never mind the consumer demand for it. Policy is dictating this as well. So you've got a kind of double whammy of demand coming through, which surely can only be positive. But as ever, we will simply wait and see. Jim, it's been an absolute pleasure talking to you. You stay safe, and I'm sure we'll catch up soon.
Thanks, Andrew. Thanks very much.